Good morning and welcome to my YouTube channel. I would really request you to please press like and subscribe so that you can get notifications of all the future videos that I'll be uploading on my channel. Today, what we're going to really talk about is India's foreign exchange reserves. For every Indian, it is really a proud moment. India has crossed and surpassed the 500 billion mark in terms of foreign exchange reserves. India has come a long way since 1991. People that can recall in 1991 there was really a crisis wherein India had to pledge the gold and really get a line of credit in terms of foreign exchange, because India had only that much amount of foreign exchange to pay for 3 weeks of imports. As we sit on this war chest of 500 billion today, we are comfortable to pay 1 year worth of imports in today's economic GDP terms. This really gives the comfort as far as the comfort to the Reserve Bank of India, rating agencies, and Government of India on the whole. If you really look at the situation in terms of gold, we today have approximately 650 tons of gold, of which 360 tons are with the Bank of England and the Bank of International Settlement. That really eases the nerves that in case there is a large withdrawal from the Indian markets in terms of dollars, pounds, or any other foreign currency, India will really be able to support its currency, INR, against these international currencies. If you look at the 500 billion reserves that is there, it's approximately 15% of the GDP that is really present in terms of actual numbers. 460 odd billion is in various currencies. That is the US dollar, the pound, the Japanese yen, and the Chinese yuan. $32 billion is in terms of gold, which is approximately about 6% of the total reserves, and about $4.2 billion is in terms of SDR, as far as the International Monetary Fund is really concerned. Hence, India is in a relatively comfortable zone in terms of foreign exchange. The Indian economy has been really, really slow. Even before COVID-19 really hit the Indian markets in March of 2020, all of 2019 was a very slow GDP growth rate, where we had fallen in terms of less than 5%. However, what we really saw in March was a flight of capital from the Indian market, because there was a risk off in terms of capital across the globe, whether listed, unlisted. So we really saw about 60,000 crores, the worth of foreign reserves, really get out of India in terms of foreign investors. However, things have really drastically really changed in the month of April and May. And in April and May, approximately 100,000 has been invested. $100,000 has really been invested back in the Indian markets. A lot of sentiment has also been very positive, with Reliance Jio attracting a lot of foreign capital, and large amount of capital in excess of 1 lakh crores has really come in terms of commitments, and this foreign currency would also enhance the total war chest that India really, really has. If you really look at the situation, it is a very good situation, wherein from the week of May 29th to 5th July, there has been abundant, and it has been the maximum amount of growth in terms of foreign exchange reserves. Approximately $8.2 billion has really increased in terms of foreign exchange. However, when one looks at these figures a little deeply, you will really look at foreign portfolio investments was only mere $2.6 billion that they've invested in that week, starting 29th April to about 5th of June. So how is this figure $8 billion? For that, you really have to deep dive into the constituents of really what exactly are the foreign exchange reserves as far as India is concerned. India approximately has 50% of its foreign currency reserves in US dollars, compared to other emerging markets which keep it as high as 57 to 59% in US dollars. That means the remaining of the reserves are really in other currencies like the euro, the yen, and the Chinese yuan, and the Great Britain pound. So what really has happened, if you go back in history, is basically in the week of 29 September 2017, the dollar weakened, and that was the second highest in terms of increase as far as foreign exchange reserves are concerned. Similarly, in the week of May 29 to June 5th, it really a phenomena has happened wherein the US dollars weakened to an extent of 2.3%. So when the US dollars weakened for 2.3%, the reserves which are held in non-US dollar terms, that is the euro, the Great Britain pound, and so on and so forth, they become stronger. And when they become stronger, the overall reserves and revaluation really, really swells. So if you really look at it, if in the near future, the US dollar continues to weaken over a period of time with the amount of money that is being really printed in the US markets, don't be shocked if we cross about 600 billion in terms of, in terms of foreign exchange reserves, in terms of valuation of the real reserves. However, this position is extremely comfortable and gives a lot of confidence to the Reserve Bank of India and the government of India and a lot of rating agencies. One of the biggest problem the rating agency has when they're looking at a sovereign rating, India recently has been downgraded to the last leg as far as the investment grade is concerned. Even when an economic outlook is extremely bad, our foreign exchange reserves are really swelling. That will be the catalyst that will really help and enhance in terms of a rating upgrade. If you really look at the Reserve Bank of India is the custodian and really the organization that looks at the value of the rupee against the other major currencies like the euro, the pound, and the yen. At the same time, they look at remittance. Today, we are allowed to remit 250,000 per person per financial year, which could change over a period of time because with the amount of kind of reserves that we really have at present. So putting this complete context together, wherein about $460 billion we have in terms of currencies, that is the US dollar, the pound, the euro, the yen, and the Chinese yuan. $32 billion we have in terms of gold. Of the $32 billion in terms of tonnage, we have approximately 650 tons of gold, of which 360 tons of gold are with the Bank of England and the Bank of International Settlement. That really gives us the cushion that in case there is flight of capital from India, we are well supported and we can really support the INR against other major currencies. This is the kind of encouragement that the Reserve Bank of India will really have in terms of placing the rupee as far as the dollar is concerned. What we have really witnessed is when the rupee really becomes weak, Reserve Bank of India will sell dollars. When the rupees become strong, Reserve Bank of India will start buying dollars. Reserve Bank of India has been buying dollars and thereby giving that much amount of similar liquidity in INR terms to the domestic market in terms of the LAF and other facilities given to banks to really revive the economy. So there is a lot of liquidity that will be pumped in the Indian markets for a simple reason that we are adequate as far as foreign exchange reserves are concerned. So when international investors really look at India, they will look at India as very confidently with the kind of interest that we really had and the kind of inflow of capital that really has come in as far as the Indian markets and the war chest as far as foreign exchange are concerned. So please remember, today we are at 500 billion, but when we really jump to 600 billion, which is not very far away, it's not necessary that 100 billion is really coming. Maybe if the dollar continues to weaken and other currencies become stronger, like the euro and the pound become stronger, that amount of reserve which is held in euro and pounds will really swell up, and the race to really reach 600 billion in terms of foreign currency reserves is not very far away. Hence, in a gloomy situation, this is a silver lining that probably India is looking at in terms of sovereign rating, in terms of attracting capital and really demonstrating to the world that no doubt India is the destination as far as investments in the long run is concerned. Thank you.